Hello friends, welcome to the session on general insurance. I myself, Dr. Sanket Charkha from Savitribai Phule Pune University. My qualifications are graduate and postgraduate in commerce, postgraduate in Masters of Business Administration from Savitribai Phule Pune University, Masters of Philosophy and Doctor of Philosophy, that is PhD in Banking and Finance from Savitribai Phule Pune University. My specialization is into banking, finance, economics, general insurance, and so on. Now let's begin the learning. In the first part, we'll be understanding and dealing with the present or the current scenario of insurance industry in India. The learning objectives. From this particular session, at the end of the lesson, you will be able to understand the present scenario of insurance company or the insurance industry in India, as well as you will be dealing with and understanding the various basic terminologies or definitions that have been associated with the term insurance. And lastly, what is the present or current scenario of insurance industry in India? Now let's start the learning. Insurance is a risk instrument that lowers or eradicates the displacement of a person's life or an asset. So, in this case, what do we understand? That insurance is a medium or is a mode for reducing the life or reducing the risk of an asset. Now, at a particular stage or any point of time, whatever we are doing, we conduct various business transactions and business activities. So while conducting those business transactions and activities, we always undergo or undertake certain amount of risk. And that amount of risk is either shared or it is unshared. The amount of risk which is being shared between the individual is called an insurance. Whereas the risk which is not being shared, it is completely borne by a person, that is an individual. So in terms of insurance, we are trying to displace this amount of risk from one mode to another mode. It is a technique for transferring the risk. So what we are doing in terms of insurance, the risk is being transferred or it is moved from one person to another person. That is, for example, in this particular case, now purchasing an insurance policy. When you say that I have purchased an insurance policy, what do? You transfer the amount of risk from your end to someone else's end. Now here in this case, there is a concept of insurance company. That is, you have to purchase an insurance policy, and whenever there is an unfavorable outcome or whenever there is a displacement or whenever the outcomes are not favorable. So in that case, in order to reduce the risk of loss, in order to save a certain amount of money or cost, you move from one origin to another origin. So that is the concept of insurance. An insurance firm takes on risk in exchange for the premiums paid for a large number of people. So what does the insurance company do? The insurance company on your behalf, they undertake the risk that has been occurred and the loss that you have suffered. So in this case, in return, what do? You have to pay a certain amount of money in terms of premium. So whatever premium that we pay on those particular basis, the insurance company compensate the amount of loss that has been incurred. It compensates the people who have suffered a loss and who has filed a claim. So here in this case, it is essentially required that you file a claim, and accordingly, whenever the claim is been filed, you get a certain amount of return. So that particular amount of return with respect to the loss that has been occurred is been compensated by the insurance company. So here in these slides, we have seen or we have understood what is an instrument, what is an insurance instrument, how the risk of loss can be occurred, what are the various modes through which the insurance policy or the insurance company or the agency is into existence, and how the actual compensation of loss is been undertaken. Now, why do we take insurance? Insurance doesn't always lessen the likelihood of an unfavorable outcomes. So what are we looking for? We are always looking for the favorable or the unfavorable outcomes. The outcomes that you are looking for a business concern may be either in your favor or maybe it not be in your favor, wherein your possible outcome that you are looking for. So in order to reduce the risk of loss, we always try to take the amount of insurance. Certain types of insurance such as auto insurance are also essentially required. Now let's take an example at this particular stage, wherein, for example, you have purchased a car. Now when you purchase a car or a particular vehicle, why it is being used? It is used for transporting or moving the goods from one place to another place. So here in this case, what are we trying to do? We are just moving goods from one place to another place. Now, in the particular transit or in this particular movement, the goods may either be damaged or the goods either may not be damaged. That is, it may reach the destination safe and secure. So here, in the case when the goods are being reaching to a destination in a safe and secure basis, it is called as a favorable outcome. But in the reverse situation, when the goods are not moving or not being placed to another destination in the safe and secure manner, that concern is called as an unfavorable outcome. So in that particular case, what do we have to do? We have to buy an insurance policy. So what does the insurance policy does or what it undertakes? It simply assists you in analyzing or finalizing the particular claim and whatever loss that you have occurred. So the insurance company on behalf of you will automatically and will on submission of your policy or the claim documents, they will analyze and scrutinize and find out what actual loss you have suffered. So based on the loss that you have suffered, the insurance company will compensate the loss for you. Now, this particular loss will be compensated only when there is an unexpected event that has occurred. So the event that has been occurred must be an unexpected one, and accordingly, the loss must be actually suffered by an individual. Purchasing of certain types of insurance such as life insurance and health insurance are also essentially required. So when we say that we have purchased or we have taken an insurance policy, which is either a life insurance or which is either a health insurance, in that particular cases, what are we looking for? We are just not only looking for the compensation, but we are also looking for the tax benefits. So a particular scenario where actual benefit or actual loss may be or may not be into existence, that particular scenario may be called as a concern of benefit. So here in this case, now whenever you purchase a life insurance policy or a health insurance policy, along with the benefit that you will be getting at the time of loss that has been occurred, you will be also getting the various benefits in terms of taxes. That is exemption from a certain amount of tax which is going to be incurred or which is going to be paid to the government. Now the various prominent health coverage categories. So the health insurances or the insurance have been categorized under life insurance or general insurances. In terms of life insurance, you have different types of life insurance, which is a term insurance, a whole life insurance, an endowment policy, a unity link insurance plan, a money back, a retirement, the child insurance, and the annuity or the pension plan. So these are the various different types or categories or the list of insurance coverage wherein the life of a person can be insured and you can pay the premium. Prominent health coverage categories. Under the health coverage, we have non-life and or the general insurance. Under the general insurance, you have health insurance, travel insurance, motor insurance, and the home insurance. So any of these one single component or the commodity, either your health, which you will be paying the amount of expenditure to the government or to the hospitals, the travel insurance for moving or destination traveling from one place to another place, the motor insurance for either your two-wheelers, four-wheelers, or the vehicles that you are owning, and lastly, the home insurance for your home that you have been living into or for your business concern. So for a building, for a premises, the insurance coverage can be undertaken. Now, the sector or the current or present scenario in India. The insurance industry is being regulated and governed by the guidelines that have been provided by IRDAI, that is Insurance Regulatory and Development Authority of India. So it acts as a prime and supreme or governing or controlling the regulatory authority, and it conducts the business transactions or operates the modes of businesses in the effective manner. There are several players that offers a variety of items to meet the variety of purposes. So along with the IRDAI, we have various other participants who will be providing or who will be governing or controlling the various regulatory authority agencies in terms of business organizations. And lastly, currently in Indian economy, we have around 24 major life insurance players and 37 plus general insurance players into the market. So these are the various service providers who in a specific period or a point of time provides different services in terms of insurance. Now, where should I purchase the health coverage from? So you can purchase the health coverage policies from the insurance brokers, the corporate agents, the web aggregators, the individual agents, and directly from the company. So these are the various modes or the platforms or the particular concerns through which the insurance policy can be undertaken. An insurance broker is a particular person who acts as a mediator or a middleman between the insurance company and between the customer. The corporate agent is a particular person who acts as an agent or a middleman between the company and the insurance company. So a company who is purchasing an insurance policy and the company who is giving the insurance policy. Web aggregator is a particular person who deals in both of the coverages, that is the life insurance as well as the general insurance. The service providers with respect to individual agents are the individual agents which deals with a particular person on one-on-one basis. That is, you as an individual, I as an individual, or someone XYZ person as an individual selling the insurance policy. And lastly, directly from the company. So you can directly approach a particular organization or a particular company, and individually you can purchase an insurance policy. So now let's summarize what we have learned today. So in this particular session, we have learned the following concepts. Well, that is, what do we mean by insurance and what are the various different types of insurances. We have also seen that what is the current stage or the state of insurance industry or the market in Indian economy, which are the various regulatory authorities or players in terms of Indian market, and lastly, what are the various types of insurance policies. I hope you must have enjoyed the learning. Thank you.